Hey guys, what's going on? Welcome back to a new episode of Watchlist Wednesdays. This is episode 3, so if you haven't checked out 1 and 2, do give them a watch. And if you are new here, do subscribe and check out Sniper Sunday's videos as well. So just to give you a bit of a lowdown, Watchlist Wednesdays, I created this series just as like a midweek kind of update, like a quick kind of 20-25 minute video. But if you do want more detailed explanations and like a weekly, the weekly analysis, that's Sniper Sundays. So if you just want a quick you got like 25 minutes or something on your free, then do watch this one. And if you have some more time to go over some charts, then do watch Sniper Sundays. They're a lot more detailed. So it's currently Wednesday and it is 2 or 10 past 2. I've just got done finishing the video for the members zone. It was 45 minutes, so it wasn't like a quick update, but I sometimes just go into proper detail, and we have a Q&A on Wednesdays, so they ask me some questions about psychology or psych levels or the EMA, and I just go into more detail and explain it for them. So it's they have access to me to ask me any questions they kind of want, and when midweek update for them basically gives them the option to do that, which is pretty cool. I only just started this kind of series midweek update for them as well recently, because I was only just doing the weekly analysis plus the daily updates for like day trades, trade ideas, like giving them like kind of entries, and basically me showing them how to get trades that I do, which I post on all over my Instagram. You can clearly see from my stories, I've been doing it for 42 weeks or something like that since I started posting it. So yeah, do check that out if you haven't seen it already. So yeah, for this week's video, we're going over CAD sheath, sheath JPY, GBP JPY, and gold. So it will just be probably like a 20-25 minute. I'm not going to make it too long because we've already gone over these on I think it was Sunday. Yeah, I think I went over a couple of these on Sunday. So yeah, let's just get started. So CAD sheath was a trade that I think I gave out on Sunday. So you can go back to that video if you want to watch it and basically see how I've analysed that. But basically, I trade. I go with trend, right? So that basically means when price is making higher highs and higher lows, and higher highs and higher lows, I wait for the retracement for the higher low to take it to buy it here to basically take it to the higher high. Okay, so we obviously use confluences. So people ask me, oh, do you just trade off support and resistance, or do you just trade off Fibonacci's, or do you just trade off key levels? No, I don't. I use them all together in conjunction or in confluence to make the really the ultimate strategy, which I've basically created with my own psych levels, with my own fib levels and my own EMA. So with Fibonacci's, we basically use it from the last significant low point, which is clearly here, to the last significant high point. Okay, and then we look for the retracement. Okay, this is the retracement that I'm talking about. We look for this little retracement here. Let me just write it on for you guys so you can see. So this is the retracement. We're not trying to sell this because that would be against trend. So if we're making higher highs and higher lows, this is called an uptrend, right? The ascending trend line, yeah, here. And then we obviously wait for the retracement, wait for the rejection from our golden pocket here, okay? And then we look for the rejection to take a buy, okay? Straight up to there was a key level here. So yeah, if you haven't checked out Sunday's video, check it out because this is detailed. It's explained in detail. I don't want to go over it again because everyone that might watch that, they don't want to be listening to that again. So go give that a watch. So yeah, basically, okay, what do we have? We have an ascending trend line, which is one confluence. We have structure because it passed resistance, broken through, now acting as support. So that's structure. We have a psych level of 0.7000, which is a round number, which is what basically price is attracted to. So that's 3. We have our Fibonacci, our golden pocket between the 71 and the 78. So that's 4. And then we have the daily EMA. So the daily 51 EMA coming in as well. So that's 5. and then obviously we're going to be waiting for the candlestick rejection, which will be 6. So that's 6 reasons to take a trade. It's not just, oh, support and resistance, or oh, it's come to a cycle level. It's 6 reasons, 6 of them together, to take a trade. Okay, so it's basically like an 85% probability that's going to go in our favor. So, doing it off support and resistance 50-50, we don't want 50-50. Trading is about having probability in our favor. So we make the market work for us. So when I say rejection, people be like, what does that mean? That basically means you read the candlesticks to basically show you that the momentum's gone. So like clearly down here, we can clearly see, so price came down to this kind of, actually let me use a better example. So price came down here, and you see this really bearish momentum. And so imagine this was a 60-mile-an-hour road, and you're not going to be able to. Why would you try and buy this? Because the momentum's so strong to the downside. You want to wait for that, slow down in momentum. So slow down in momentum would be, price action which showing indecision. So indecision would be spinning tops, hammer candles if we're trying to buy it. So hammer candles, dojis. So they're the main 3. So here we had this kind of hammer candle, doji, and then we had another hammer candle here. So that's 3. So I always say to the guys in my team and in my group, I say we want to wait for 3, usually 3-4 hour rejections before we take a trade. So let me just mark this off. So we had that rejection. So that's showing you, imagine it's after 60 mile an hour, it's slowing down, it's coming up to a roundabout, and it's going round the roundabout, it has to slow down. And that's when we take the buy, okay? We take it on the roundabout for us to go, and it goes to do a 60 mile an hour around the other way, around the other motorway, okay? Imagine that. It's just, I'm just trying to explain it for people who don't understand, or who are new. And then, yeah, it just goes, and it goes back up to the upside. So you can clearly see what happened here again. Came up, yeah, it had this kind of pullback, and then it had this roundabout. Shooting star, doji, 3. So 3 is our magical number, and then what happens? Sell off, bang. Okay, you see that? And it happens time and time again. You can keep seeing it. It might be on different time frames. So if we get onto the 2-hour time frame, we can clearly see, even at the top here, okay, you can clearly see you had this like shooting star and a spinning top, kind of like another, not the greatest shooting star, but then we had the sell off again. Even here, you see it here, it had that little bit, then had shooting star doji, and then this obviously formed that massive shooting star kind of formation. Okay, and you can even see it from the bottom again down here. Okay, so like here we had that hammer or spinning top hammer, and then it had the massive impulse to the upside, and you can even see it up here. It happens again and again. Spinning top, shooting star, and then it sells off. So it just happens again and again. It even happened recently. So this is where price is currently. You had shooting star, then you had like spinning tops, dojis, and then another shooting star, and then it had a sell-off. So it happens again and again. You can see it on the 4-hour time frame. So that's what we'll be looking for. We'll see 3-4 hour candles from this kind of zone before we take a trade. So some of the guys were asking me in the chat, they were like, yo, it's broken through. Is there a trade? I'm like, nah, there's no trade, because basically if it doesn't reject, then it's no rejection, no trade. So if this just goes straight through without any rejection, like I've just explained to you, then it's invalid. Okay, that's what we look for. So it's basically the market telling us that the price has slowed down and momentum's basically gonna flip to the upside now, and that's when we can get on that, and that's when we can utilize that and get a really good entry. So basically what I'm looking for, we have 6 confluences. I'll be looking for price to come down to this pink box zone, to reject, like I've just explained, for us to take a buy up to the 73, the cycle level 0.73, and that also meets up with the overall trend, with the descending trend line. So you've got 1 touch, 2 touch to make a trend line, and then that will meet with the 3rd touch, which is our lucky number to take a sell. We'll be taking a sell once it rejects this zone. Literally that simple. So that's CAD sheaf. I hope that I've made that easy enough for you to understand. But yeah, so I'll be obviously updating this for my guys when this looks ready and good to go to take probably a buy from here. Sheaf JPY, JPY is pretty simple. It came up to this. It's not my favorite because it didn't have a fib on it, but it obviously came up to this kind of resistance zone, and it's rejected. So you had this resistance zone, so it hasn't been this high since basically the start of this year, so that's 6 months now. And every time it comes off, it has a sell-off. So 1 touch, sell off, 2 touch, sell off, and let's come up with the 3rd touch, which is our favorite probability, our favorite number. So it gives us an 85% probability for a sell off. And then obviously I got in on this and I gave it out to the team. Again, look what happened. Came up, I said look for those 3-4 hour rejections, and what happened? Like, you know, saw this spinning top, shooting star, and then obviously I took a trade from off here. Then it came up to retest, and that's when I said to guys, if it comes up to this kind of pink zone again, take a sell. So we're sitting, it's nothing crazy. It was like 150 pips, but at the moment it's only like 80 pips, which is nothing crazy. But yeah, for you guys, if this does come back up, do look for kind of rejection from this zone, just showing you kind of the candlestick rejection we look for. And then obviously it's just basically ranging, so I'll probably be taking this down as a swing trade, down to here for 500 pips, 520 pips. And you can clearly see it was down here 6th of May. So now it's, you know, the 6th of June, then I can most likely duplicate this, and it will be 6th of July, it'll be back down here. Okay, so let's just wait and see what happens. But that's looking cool. So that's just a quick one. We have GBP JPY, which is another one which I don't know if I gave out to you guys, but I gave it out, definitely gave out to my team. I said to them, I was like, so we can clearly see from the bigger time frame, yeah, that is on the daily. Let's put on the daily. There's 1 touch, 2 touch to make a trend line. Okay, so 1 touch, 2 touch to make a trend line, and then obviously we're looking for the 3rd touch again here to take that sell. But obviously there's a trend within a trend. So here it's making higher high, higher low, higher high, looking for the higher low to take it up to here. So this is just a small trend within the bigger sequence, the bigger downtrend. Okay, so all I did was I let me just remove this real quick so I can kind of show you what I'm seeing. Okay, so I'm going to fib it for you guys to see. So you're probably thinking, why is that pink zone there from the top? Because look, I just fibbed it from the last significant high point to last significant low point on the bigger trend, and that lines up with the 78.6 and the 14100 kind of level. So let's just type that in. So that's the psych level, and that's where it would line up. So that's why that's there. So we know that on the bigger trend that we're waiting for that to come up to us, our golden fib level. So then obviously I'm gonna fib this from the last significant low to last significant high, and that's how we got that. And then obviously we're looking for that retracement, like I always say, probably back into that kind of 1.34 kind of psych level, which we can double click and make it we can make it basically really precise. Okay, so that's that. And then obviously, do we have structure? Okay, not particularly. We do have some. We have, you know, this kind of like support, resistance kind of level. So yeah, we do kind of have a little bit. So then yeah, I'll be looking for a long back up into to the minus 23, because that aligns with the bigger trend. Okay, like I explained earlier. Okay, that basically aligns with that perfectly. So this isn't the greatest risk to reward, but I even said to the guys, with this stop loss, you can basically have a look of where basically the liquidity zone is. So you can clearly see here that price keeps coming down to this kind of, like, look here, price wick down, wick down, wick down, wick down. You see here? So you can just have your stops just below this. So that brings up to a 4.2 kind of ratio, and that looks really good. So what you're probably thinking, well, what's he looking for? I'm looking for this. I'm looking for this retracement, which is basically occurring down to here, and then I'll wait for the rejection, like I explained. Yeah, like I explained right at the beginning, and you can clearly see it's happened again here. Look here, look, hammer candle, hammer candle, hammer candle. There's your 3 off the 51 EMA, like part of my strategy, and there you go. And that's what I'm looking for here. And if that doesn't occur, then I ain't taking a trade. It's literally that simple. So people just take trades, are like, yeah, it's come to the zone, yeah, I'm taking trade. No, you wait for the rejection. So that is basically what I'm looking for. I'm looking for a buy if we see the rejection from the 1.34 level, and that's literally that simple. And I'll be taking 50% off here, and then obviously closing the other 50% off here. So taking partials. Cool. So that's that. And finally, last but not least, we have gold. Yeah. So some of the guys did some analysis, and they was like, yeah, it's looking good for sales at the beginning of the week. And I'm not disrespecting them at all. It's just I'm just giving you an example. So they had this kind of trend line on, and I said, and you're like, yeah, they were taking sales. Some of them got in some sales, and I was like, nah, I don't think so. So within my member zone, you get access to me to help you with your chart work, okay? So yeah, basically they were like, yeah, it's come up to the second, third touch, and they said that sales look good, and I was like, I gave my opinion, didn't say it, I said no. I said I'm waiting for price for this, and obviously it didn't come up to us our golden fib level or our EMAs or any other thing like that or structure. So I said I gave my opinion, and yeah, they obviously pulled out at break even, so they didn't take a loss. And now it's doing basically what I kind of predicted. I said this is what I think is going to happen with this outer trend line: one touch, two touch. I'm actually going to redo it for you just so you can see. So it's a clear chart. Okay, I can clearly see. Yeah, this is a lower. So this was the top. This was the lower low because it broke like this point and this point here. So that's the lower low. Then the lower high was occurred because it didn't break this point here. So if this went like this and went here to here, that would be a higher high compared to that, but it didn't. So it's a lower high. Okay, so lower low, lower high, lower low because it broke this point here. We're looking for this to be a lower high, so we're looking this to kind of reject below this, take this a lower low. Okay, it's literally that easy. So what I usually look for is I stick a trend line on, always first and foremost is trend line. So one touch, two touch. Okay, if you want to, you can put it closer to all the bodies. If you want to, I like putting it to the wick just because it will likely wick up, as gold always does. And I can clearly see that there's this liquidity zone. So liquidity zones basically means where price wicks up to wick. So there's wick sell off or wick and it rejects, wick rejects, wick up and it rejects, and then obviously here we took a sell from here last week, gains at 700 pips, and then it had to sell off again. So I can predict it happening again, and we can wait and see if I'm right or not. So let's have a look. So this is the kind of liquidity zone that we can see. This kind of 1738 kind of level. Actually, I'm gonna keep it at 1735 because it's more of a cycle level. So we've got obviously 5. Okay, so let's leave it like that. So we can clearly see price is rejecting this kind of zone, and then we can fib it from the last significant high to the last significant low. Okay, so we got that, and then obviously we have the 78.6 at the kind of 1730 cycle level, but I predict that price will probably wick up into this 1735 level. Okay, so I'm gonna stick a short on it from here because that's what I want it, and have my stops just above this this wick, so we can stick a thing on it like this and have our stops just above it, just to make sure that if price does wick up, yeah, we won't get stopped out, and then we can rest easy kind of thing. So this is what I'm thinking. Price will come up to this liquidity zone, okay? Yeah. If we see the rejection on the 4-hour time frame like we did previous, and this is where I took a trade, yeah, look here. Spinning top, doji, and then obviously had that kind of shooting star formation on the 4-hour time frame. That just shows the clear rejection, okay? So that's 3 4-hour rejections even here. Shooting star, doji, spinning doji, doji, or doji, spinning top, and then we had sell off. So that's even more, okay? And then what happened? Sell off, okay? So what I'm looking for again is basically that exact same price action, the 3 4-hour rejections from this zone to take a sell, and then obviously I'll be taking 50% off here, 25% here, 25% here, okay? And that's basically it, and it's literally that simple. So wait for the rejection. So we have descending trend line, we have cycle level 1735, we have what else do we have? Liquidity zone, we have fib level, yeah, 78.6, and obviously candlestick rejection if we see it. So that'd be 5 confidences, take a sell. So that's 5 reasons again, and that's a 6.6 ratio, 1,100 pip gain for a 160 pip loss. So, you know, if people think 160 pip loss is big, yeah, it might be, but we only risk 1% per trade. So we're risking 1% to gain 6.6%. So, yeah, if that was a £10,000 account, you'd be risking £100. yeah, £100 to gain 600 or £660. So that's how you got to see it, basically. And obviously, if you want to risk 2%, you go ahead and risk 2%. It's up to you. It's your balance. But I always stick, or I always tell people to stick with 1% because it's just a good habit to get into. So yeah, that is the update, the weekly update, midweek update, we're gonna call it. Watch this Wednesday. If you do want to get involved with the members zone, I'm at like, I think it's 84 members now. So from last video, it's gone up like 15 or some shit, 14. So that's pretty mad in the space of like 3 days. 3 to 4, I think it's 3 days. So yeah, I'm probably gonna stop accepting people, or kind of slow it down a little bit once it gets to 100, because I need to make some changes to just some changes and some stuff. Like, obviously the first 100 are going to be invited to the KFX meetup, which will be probably hosted in August now. So the kind of COVID bollocks will be over, and it won't be social distancing, and we can kind of chill out. So yeah, I'm most likely going to get like a mansion in Surrey, pool, get a pool, get a kind of like American type barbecue, like kind of brisket thing going, and we'll just have the whole like day to the evening, and then everyone will be able to stay over if they want to stay over, get some drinks and stuff. Yeah, just be able to meet everyone. So that'll be the first 100 members will be invited to that. So if you want to get involved, don't kind of wait for some reason. I don't know why people would. Yeah, so prices are it's $39.99 for a month, which is like cheap as chips. I know I said price was going up on Thursday, basically today or Thursday, but I've had some basically some issues with the card and payment gateway portal, and I'm basically trying to transfer into different payment gateway, and it's going to take a bit more time than I expected. So the price isn't going up just yet. So get involved now, because it's going to be going up in the next month or so. Nothing drastically, but $39.99 is £10 a week for two basically 40-minute video on Sunday and a 40-minute video on Wednesday, plus all daily updates and a community chat and access to me. Like, it's kind of mad that I'm doing it for that cheap. So if you want to get in now and be part of the founding members first 100, then don't sleep on it. But price will be once we get like 200 members, price is obviously going to be going up, because supply and demand, simple supply and demand, and I need to control the numbers and stuff like that. So yeah, if you want the updates and you want to join the members zone, you want to get part of the team, then do DM me and I'll give the details, and we'll get you signed up and everything. But yeah, projections are pretty mad. Like, I'm expecting kind of 200 members by August 1st, kind of thing, and then obviously we have the next 6 months, which is going to be crazy. So yeah, if you're listening to this now and I'm only at 80, like I started this 2 months ago, I've literally jumped up like kind of like 50 members in the last 3 weeks. So the growth is crazy. If you want to get on this now and be a founding member, do get on it. And yeah, if you're new here, do subscribe and like and share and all that good shit. And obviously watch out for the next episode of Sniper Sundays, which will be up at 8 PM. And yeah, so thank you guys for being here and supporting it. And I hope you've gained some value, and I will catch you on Sunday.